We will now begin shortly with our first speaker of the second session, Joe David, who is the Managing Director at Elementos. Joe joined Elementos in 2021, having previously worked in private equity, mining companies and mergers and acquisitions advisory firm, and as well as running his own project development consultancy. So Joe will now present on Elementos' projects in Spain and Australia. Over to you, Joe.
Thank you, Freddie. This one's not changing down here. Is this meant to change? It's all right. I'll just turn around. I've seen most of the slides before. I guess first comment to every people in the room. This is obviously the Investing in Tin conference or seminar. It's been a pretty tough year for most people in the room, I think, both the volatility in the tin price and then where the equity markets currently are. So, I think having a look at Jeremy's, supply and demand curve, which he keeps pretty close, but we're always happy to see it when it comes out. There's the investment thesis, and certainly I'd say for most of the listed guys in the room, there's certainly some pretty good value out there right now. So I encourage you to come have a look at all of us. All the projects in this room are required, not just the Elementos ones, but we're quite a collegiate industry, so very happy to talk about our own projects and point in the direction of the other ones. So anyway, I'll move on and start talking about the Elementos, as my board would expect. So we've got two projects, one of the few companies with two development projects. Our flagship project is the Oropesa tin project in Andalucia in Spain. And our other project, which is a brownfields, it was an old operating asset till the mid-80s. It's already been explained what happened in the 80s to most of the hard rock mines. That's an early development asset for us, and certainly has got some other minerals of interest in it as well, which I'll take you through at the end. So I deleted most of my supply and demand slides, knowing that Jeremy was going to do a much better job than the rest of us do. But if anyone's seen us present at any other conference, pretty much we always have to promote tin first, so because there's a lack of understanding out there, and secondly we get into pitching our own projects. So, but for us, one of the key things, this comes to the theme that's building, we've already heard it multiple times, is it's the lack of tin projects in the developed economies around the world. There's absolutely no tin supplies in North America, which, with the US economy is mind-boggling. Canada, US, Mexico, there's nothing there. Australia, produces a little bit of Renison and a few other byproducts, and Europe's got nothing. So obviously the Penalta mine up in the north of Spain was producing, it's currently not producing. So there's zero production within Europe. So there's some major economies there without the domestic supply. And we certainly think ourselves, and I'm sure other people in the room think their projects are going to play a role in solving what everyone's starting to see as some pretty significant geopolitical risks. Obviously, most of the seaborne concentrate market goes to Asia, and for a lot of the developed economies, the thought of your concentrate moving from where you're mining it halfway around the world to a smelting facility and coming back. Firstly, you lose the security of supply in that. Secondly, the carbon aspect. Thirdly, the cost of transport. And we saw what happened to shipping during COVID. There's a lot of challenges there, and there's a lot of economies around the world that are looking at vertically integrating their supply, like most of the major producers do around the world already. And certainly, there's plenty of people in this room that know there's a couple of building stories within Europe with smelting, as well as other places around the world. So certainly, Elementos is quite focused on that, and we'd very much like to be smelting and going mine to metal within Europe, and then subsequently with our Tasmanian project in Australia. So our Oropesa Tin project is our flagship project. We acquired it about 4 years ago from a company called Eurotin. It will be an open pit mine. Deepest part of the mine is about 250 metres. Andalucia is the region in Spain that you want to be mining in. It has all the large copper mines. It's got in the Huelva province there, you've got the Matza mine, which Samfire bought into last year, Cobre-las Cruces, which is owned by First Quantum, and the Rio Tinto copper mine owned by Atalaya Mining. Noteworthy, they just got a very large expansion approved, big open pit expansion approved by the Andalusian Junta as of yesterday. So certainly shows that major mining projects are well supported by the government there. So we are very mature with a definitive feasibility study, but that's currently on pause, and I'll take you through the reasons for that later. So the data I can still take you from is from our scoping study, which we completed at the start of last year. Of nearly 19 million tonnes when we ran that, we had about 15.5 million tonnes coming through as a production target. We believe that's going to be quite close to the reserves when we're able to put them out at the end of the DFS. We've ran that at a $30,000 pit shell. Being an open pit mine, we are able to sensitise that the cost of production by how deep and wide we go at various times, so we can lower our all-in sustaining cost if and when required. But certainly, we're very happy to do the technical analysis at $30,000. In terms of the scale of the mine, we're planning 1.25 million tonne mining rate, gives us about a 12.5-year mine life. We do use the Tomra ore sorting facility. We have a rather disseminated tin ore body, so we don't get the upgrades of some of the other coarse guys, but we do reject about 25% of the feed, which reduces the size of our processing plant. Through a gravity circuit and a tin flotation circuit, we're forecast to produce about 5,400 tonnes of tin concentrate per year at that 62 to 64% grade, which is about 3,350 tonnes of contained tin, which is roughly going to be 1% of the global tin market, but potentially 100% of Europe's tin market. So that's the way we like to look at it. There's about just under 40,000 tonnes over the life of mine, and when we ran the economics last year in a different tin price environment, we're about $200 million US. All-in sustaining cost was about $19,000 as well, and very healthy looking financials there as well. Since we did that study last year, we've done some further drilling. Mostly, the tonnage went up by about 4%, but that wasn't the main purpose. The purpose was to get all the mineralisation up into measured and indicated. Obviously, measured and indicated are the only two categories that can be converted into JORC ore reserves. JORC ore reserves are the only ones the banks really want to see. So for us, 95% of our resource is now sitting in measured and indicated, and of the $30,000 pit shell, all the resource, 100% of those resources are measured and indicated. So the conversion into reserve should be significantly strong. This slide is a little bit old. During this week, we actually announced a zinc resource as well for the project. We had a lot of historical data, done some subsequent met work in Wardell Armstrong down here in the UK, and we're able to float up quite a nice zinc concentrate. That's from a reject stream that would otherwise be going through the tailings dam, so very opportunistic byproduct credit there. Low cost, and certainly will add to the economics of the project, even if zinc's only 1/10 of the tin price, but certainly it all helps when you're going to get banked, and certainly will add to the net present value of the project. We have done some drilling, so we've had the project for 3 years. All the focus has been on the infill drilling to get that resource up for the DFS, but we have put some holes outside the resource at the end of last year. On the northwest side, and we started to hit some, which looks like a slightly different mineralisation style. We do have some tin in it, all the tin grade is dropping, and the copper and the zinc is going up. So it's looking a little bit more like a semi-massive to massive sulphide, which is interesting, but certainly not going to change the base case for the DFS, but certainly gives us some blue sky upside there. In terms of the met work, we've done all our work at Wardell down in Cornwall. 74% recoveries, getting to that 61 to 62% grade, and certainly all the off-takers that we've had conversations with think we've got a highly tradable product. Our DFS, as I said, is midway through. We've got an integrated owners team there. On the top 2 levels, we've got our international partners that help us report to the international standards we have to report to, and below that we've got all our local Spanish partners who do all the good work on the laboratory and on ground. So it's a great integrated team. Certainly got a lot of people working on a combined basis. In terms of where we're at, just to show the difference between us as from the exploration projects, we have done all the on-ground work required to complete the DFS. We've done all the laboratory work. We're really in the final stages of the engineering and the reporting of our definitive feasibility study. So certainly very mature on all those fronts. In terms of the project layout, we've got quite a compact layout there, sitting next to the open pit and fairly low impact. However, as things, when you've got a project in Spain, most people have got a little bit of history working with the Spanish regulators. It's interesting because it can be challenging, but they just have a very high standard, which is one of the things about being in Europe. And we're currently working with them on modifying some of our waste infrastructure. So their main concern of our project, which we found out about mid-year, was the impact we were having on the oak trees, which is a local habitat in the region. And we're currently working with them to reposition the location of our external waste dump and our tailings dump facility. We were impacting about 3,300 oak trees, and the design we're currently working with the government on would reduce that down to about 980 oak trees. So a significant reduction for us, and certainly the conversation is going a very positive way. We're very, we believe probably before Christmas, if not early in the new year, we'll be back into the market, giving our shareholders in the market very confidence of not only what that footprint looks like, but subsequently the time frame to get our primary approval. So we're still very confident and focused on getting both our AAU, which is our integrated environmental permits, and our exploitation by the end of next year, which will allow us to go into financing and into construction. We are a state significant project. We're a member of the Project Accelerator Unit in Spain, which is absolutely critical. The project I mentioned that just got approved yesterday, it was another one of the 7 projects. So shows working with the political support there is in Andalucia, and we're working very closely and very, very well supported by the government. So look forward to giving their market that clarity moving forward. Our other asset is the historic Cleveland tin mine. It was owned by Aberfoyle, run a couple of times through the 19th century, shut down in the mid-80s. Still a very nice looking tin resource there. It is an underground asset. There's a hard rock. There's about 7.5 million tonnes of hard rock there. Obviously the grade's a bit higher being underground. We're up to about 0.75%. It's got a nice copper credit there too. Traditionally, the project has produced both a tin and a copper concentrate. There is also 3.7 million tonnes of tailings that have been done from previous operations, and certainly we've done some historic test work and looked to do some more about reprocessing them. Obviously, there's been a couple of companies recently that have been very successful of reprocessing lower grade tailings or that have lower grades than what we've got there. We also, out of interest, not that probably something to promote too hard at a tin conference, but we have a very interesting looking tungsten resource towards the bottom of that resource, the portal there as well. About 200 metres below the portal, we've got about 4 million tonnes of 0.3% wolframite, which is a very good grade, and there's a 15 to 24 million tonne target direct below that. So likely next year we'll be putting a hole down into that tungsten, looking to get some of that exploration target up to the inferred category so we can run some scoping studies and put some true mature studies against that and out to the market and get some value ascribed to what we think is a fantastic asset. There's just some historical operational history of the asset and a nice shot on the right of what the old Cleveland tin mine workings look like. The decline is can fit modern equipment. It does need some rehabilitation, some rock bolts and some meshing on the decline, and it does need to be dewatered. So I'll be ringing up the Cornish guys and finding out how to do it pretty soon, I think. In addition to that, our last drill hole down in Tasmania last year also indicated towards this was from our tin copper resource towards the surface, but as we got closer towards the tungsten, we also got some pretty interesting grades of fluorite. Fluorite was historically found in the deposit as well. So if anyone knows Tasmania, it's a highly mineralised place, and I'm sure as Andrew from Venture can say, yeah, every time you do another test somewhere, you'll find another mineral. So it's very exciting as a critical minerals province, and certainly an asset that we want to explore further when we're able to. In terms of my board, my chairman is my largest shareholder. He worked for Bechtel, the US's largest engineering construction firm, for 35 years, and he ran their metals and mining division for 10 years. He's a very big supporter, and he owns 14% of the company. So great having him on the board, as well as the other directors that support what we do. I did mention it's been a tough year in the equity markets. Elementos, March last year, was at one point trading at a $150 million market cap, currently trading at 20. That's not all to do with the tin price. It's partially to do with tin price, partially to do with the weak equity markets, and no doubt has something to do with the little pause we've had with our Spanish approvals. But certainly give you confidence that the way forward is looking strong from a project level, and we're confident not only the tin price will strengthen, but also the equity markets will too. So if you're talking about investment, I think if you're looking, you've got a slightly medium to long-term view, I think investing in tin companies, not only in Elementos, but other people in the room, it's probably a fantastic time to do so. So most of our shareholders are high net worth, so we've got some small Australian funds, but certainly starting to talk to that next level investor, both in Australia and here in London. Critical minerals, we're still absolutely bamboozled that tin didn't make the Critical Raw Materials Act here in the EU. Obviously, it's on the list in the UK, and we're also hopeful it will soon make the list in Australia by the end of this year. Thank you very much. Appreciate your time.